All right, let's just jump right into Unit 2. We're looking at merchandising inventory. And specifically, we're starting with this question here, which is a review. At this point, we've gone through Unit 1. We've gone through the regular accounting process cycle where we have transactions that occur. We get them journalized, we post them, and there's some adjusting entries, and eventually we end up going to closing the books after all the other steps are done. Now, here's a quick review, and there is a reason why I'm asking this to you, because this kind of question is analogous to what you're going to find in inventory management. What is the supplies expense for September? I'd encourage you to pause the video at this point and try and answer this question. After you've had a chance, let's take a look. Well, we've got at the beginning of the month, we've got $1,500. At the peak, we added another $2,000, making $3,500. But at the end, we do an inventory count, and there's only $500 left. So if we went from $3,500 down to $500, that means that we've used up $3,000 worth. So our supplies expense would be $3,000. Now here's a question for thought. What is the value of goods sold for September? Looks like a very simple, or sorry, not simple, but similar question now, isn't it? We start with some amount, we buy some goods, and at the end we've got some sort of inventory left over. So it's analogous. Again, pause and see if you could figure this out. Should be 20,000 plus 5,000 minus the 19. So 20 plus 5 is 25. 25 minus 19 is 6. So in this case, we'll have $6,000, which is going to be our goods sold for September. So a very similar idea of what we end up doing in the supplies example. Now, how do businesses keep a track of inventory? And that's what we're going to look at here. What exactly is a merchandising operation? It's one where you're selling a good. You buy a good and then you resell it for something else, or possibly even manufacturing and then selling that good. So we're dealing with merchandise, and that's to be contrasted with service-based industries. Services are things like a haircut, going to the movies. You're leaving without a physical or tangible good. So here's some key terms to kick this off. Merchandising operations is when we have goods that are being purchased with the purpose of reselling them for profit. We've got sales revenue, which is the money generated by selling those goods. And then we've got things called the cost of goods sold. So that's the cost of the merchandise that you're selling during the period. So for example, if I'm selling hot dogs, I have to buy the buns and the hot dog, and that would be considered to be our cost of goods sold. So let's just say it costs us 50 cents for a hot dog and 50 cents for a bun. Well, then the cost of goods sold for that one hot dog would be $1. Now the sales revenue, maybe I could take that hot dog and sell it for $2. Well, then our sales revenue would be $2. Our operating expenses are counted as things which are used to run our business but are not included in these cost of goods sold. So things like rent, possibly paying employees, these are expenses incurred in the process of earning the sales revenue. Gross profit is equal to the sales revenue minus cost of goods sold, and we usually short form this to COGS. And the net income is considered to be our gross profit minus operating expenses. And there's a reason why we break this up, because sometimes we want to be able to evaluate things. So now that we've got these two formulas, I'd encourage you to pause and see if you can fill out this chart. Let's see how you do. Take 2 to 5 minutes, see where you can get with this chart. Hopefully you can get through it, but again, you're applying these formulas. Now that you've had a chance to pause and try and do these on your own, we've got gross profit is sales revenue minus cost of goods. So if we apply our formula, we've got our gross profit will be this number, 20,000 minus 10, which gives us 10,000. So if our gross profit is 10,000, we've got operating expenses over here, which is 4,000. Applying our second one, 10,000 minus 4,000 will mean our net income is $6,000. Let's continue on with this idea. Well, gross profit, now we have to kind of reverse this idea to try and figure out where we're at. So cost of goods sold, sales revenue is 50,000 minus some number gives us our 30,000. Well, 50 minus 20,000 would give us our 30,000. And what exactly is going to be our net income? Well, with gross profit being 30 and our operating expenses being 45, we will have a net loss, which we usually represent with a brackets. It will be a minus number, which will be minus 15,000. Okay, let's keep on going with this. Our gross profit is 40,000. Our cost of goods sold is going to be 25. That means that this number minus 25 would have been 40, so this should be 65,000. And if you need a calculator for this, no problem. And 40,000 minus our operating expenses will be 25. That means that this will have to have been 15. All right, gross profit here is going to be equal to our sales revenue minus cost of goods sold. In this case, 35 minus 25 is 10. And our operating expenses, well, 10 minus 7 is 3. All right, so 3,000 bucks. So this is good exercise just to practice and get yourself familiar with these formulas. So here we move on into a little bit more stuff that is related to our inventory control. So how do companies keep track of inventory? And there are, generally speaking, two systems. There's a perpetual system, and this is usually attached to things which are like barcodes, and every time that you scan something, it automatically goes into a computer system which updates and says, okay, we've just sold 1 unit of this. And most companies will be doing it this way these days because our technology has developed significantly. So perpetual system is when detailed information of each inventory purchase and sale are maintained, and usually accomplished through barcodes and computers. And a fun fact, barcodes are very interesting. In fact, if you're to look at barcodes, you can do your own research on this, but some barcodes will even tell you which country the good or product came from. In contrast, there's something called a periodic inventory system, and this is where inventory details are minimal and inventory is determined through a physical inventory count, which means you have to actually count out what's in your inventory at the end of a period. So determine quantity and cost of goods sold on hand. And what we mean by on hand is what's actually in your store. Regardless of which system you do, both systems require a physical inventory count at least once a year. And the reason for that, well, even if you got this perpetual inventory system, there are some shady people out there who do try and steal stuff from you, and you have to try and make sure that your inventory is accurate. So they go through, and you see those people with the machines that are actually going around and just scanning things just to do and make sure that those items are in fact in inventory. All right, so here we go. Cost of goods sold is equal to beginning inventory plus the cost of purchased goods. And then cost of goods sold will be equal to the cost of goods available for sale minus the ending inventory. Again, I would encourage you to pause at this point and see if you could do this on your own. All right, let's jump right in and take a look at our answers. So using these formulas up above, beginning plus our purchased goods will end up telling us what's available. 10 plus 5 is going to be 15, and the goods sold will end up being our available, which is 15,000 minus 5, which will be 10,000. Okay, 45 plus our goods purchased will end up being 65. That means that this is 20. 65 minus some number, our ending inventory, will give us 55, and that some number must be 10. Our beginning inventory plus 10 is 80,000, so that should be 70,000, and 80,000 minus some number gives us 20, so that'll be $60,000 with our ending inventory. And again, this is just about trying to make sure you're comfortable with how these inventory numbers work. This number plus 0 is 65, well that's 65 then, and 65 minus 60 would mean that our goods sold is going to be 5,000. And we're looking at our final one here. 30 plus something. Oh, okay. Well, it looks like we're going to have to work backwards. So our ending inventory is going to be 22. We know that this number minus 22 would give us 15, which means that this should be 37. 37,000. And let's see here. If this is 37, 37 has to be equal to these two numbers added, which means this should be 7,000. All right. So if you struggle with that last one, no worries. It is challenging, but the more you practice on this stuff, the better you will get. Taking a look at the next one. There are some terms that come along with our journalizing of transactions and merchandising inventory. So here are some of the terms. Let's just go through them. Merchandise inventory is an asset account. So it's an asset that tracks the value of merchandise inventory, usually the largest asset for a merchandising company. And whenever we have invoices, these are what we call the purchase terms or terms of purchase on account. It's like saying that we have an invoice and we're going to pay it within a specific period of time. And so we see this 2/10 represents 210, which is short for if you pay the balance within 10 days, you get a 2% discount. And that's within 10 days of the invoice date. And 30 stands for short for net 30, meaning you expect to get this paid, the full balance, within 30 days of the date. And we look at this last one. Discounts are not included on any returns. And there's a lot more that goes on with returns. And here's a question for thought. What do you think 515 and N60 means? Well, again, pause the video. Let's see what you guys think. This would mean if you pay the bill within 15 days that you get a 5% discount. And this N60 means that the whole balance is due within 60 days of the invoice date. So hopefully you're able to take what you learned from here and apply it to these numbers, and you can start to read what exactly those merchandising terms mean. That's it for that's it for this lesson. I hope you've enjoyed. If you got any questions, I'm here to support you. Always drop me an email. Ask. Enjoy for now.